U.S. midterm elections are coming up in November. How do you expect that that shapes the markets and our client portfolios?
Let me step back and look at where we've been. Where we've been has been a Republican House of Representatives and Senate and Republican presidency. And they've been able to get a few big pieces of legislation through, the biggest one, of course, being the tax bill. The Republicans, as I think probably all viewers know, have a slight margin in both chambers of Congress. We have what we have referred to and described in the past as a new form of gridlock, where Republicans fight amongst themselves more in the Senate than in the House of Representatives, and in that a lot of stuff doesn't get through. Some in the House, some in the Senate, a lot of stuff doesn't get through, and that's a new form of gridlock that people aren't used to. Some gets through. What we're going to have after this election is either, and I'll come back to some detail, the Democrats taking the House by a little, or the Republicans holding on to the House of Representatives by a little, and therefore, and the Republicans will hold on to the Senate and probably gain a seat or two. So we'll have either the same form of gridlock we've had, where Republicans squabbling amongst each other with paper-thin margins can't get legislation through, or we'll have the traditional old form of gridlock people have seen forever, where the Republican Party has one chamber, the Democratic Party has the other chamber, the Republican Party has the presidency, and legislation doesn't get through. And whatever it is that you think is good, somebody else thinks is bad. And when you put through heavy legislation, the people that don't like it hate it more than the people who like it love it, and you get increased political risk aversion. Political risk aversion falls after a midterm election. It will fall after this midterm election. And we can talk about the details of the election and how it will look and why we might think it will come out this way versus that way. But the fact of the matter is that there's this long history that I've written about before that we call the 87% miracle, which is the most consistently positive streak in market history, which is the quarter that includes the midterm election and the next 2 quarters after it. Each of them in history being positive 87% of the time, 3 in a row, 87, 87, 87. The notion of that being purely random is very, very low. And then that parallels, of course, with the overlapping feature, which is the 3rd year of presidents' terms in American stock market history have been overwhelmingly positive, where we haven't had a negative 3rd year of a president's term since 1939, and it really derives from that same feature, falling political risk aversion.
You know, clients ask, I find that they ask so frequently, why is it that we think gridlock is such a good thing? I mean, Ken refers to it as political risk aversion abating, but you know, what does that really mean? And there's different ways of looking at it, but I look at it like this. The stock market wants to look as far into the future as it can and discount that. And what politics is effectively is creating the rules of the game. And when you have a situation where the rules of the game aren't changing, it allows investors to at least have the belief, they may not really know, but they'll have the belief that they can see further out than they could before because the ground underneath them is not shifting. And so that's why we tend to say political changes of all kinds we're agnostic to. We don't take one side or another because it's the change itself that alters the course of the future. And that makes things less unclear. You can't see into the future as far, at least believe you can. And so in the absence of change, people can have more confidence because they believe they can see further out. That's a bullish thing. That's why we think gridlock is such a good thing for the market.
For views on current events in the world of investing, visit MarketMinder.com. Updated daily, it offers on-demand access to Fisher Investments' most current thoughts on capital markets and the global economy, as well as our sometimes irreverent commentary. We hope you will enjoy it.